All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan. Today we're going to look at how to tell the future with charts and how to kind of utilize those skills just to make some short-term money. And we're going to use Vinny's strategy after using vertical spreads in a different video, but it's all based off this.
All right. Well, if you guys enjoy this sort of entertaining stock market content, please consider giving us a like and subscribe below. With that, we'll get to it.
Two Stupid Guys Trade Stocks.
All right.
Boom.
Yeah, going to just divine the future from this lovely glass orb here.
I know, right? It's cool.
I love it. All right.
So, when you look up candlestick patterns and charts, and it's quite frankly, it's ridiculous. There's really not much that you need to know as long as you understand the psychology of it. So to the right is just a gross amount of candle patterns.
Evening Star.
Yeah, I mean, there's a lot. That was not bad. There's a lot. I actually couldn't get it all in one photo. There's like another 20 or something. It's absurd. And all you really need to know is what the candle means, what it's showing, and then no one takes into account volume, which is the most important aspect. Okay? So when you're looking at a chart, you just say, is there a fundamental catalyst, right? If Nikola, CEO, just gets indicted, the chart doesn't really matter, right? If it starts, if it comes out that he frauded the company for billions and billions of dollars, I don't care what was happening 2 days ago to see if it's going to go up or down. It's probably going to go down. So chart doesn't matter. Did the move have conviction? We'll go over that. Are we going up or down? Seems like a stupid question, but are we going up or down? And is this going to respect support or break through it? So that's what we're going to go over.
Okay.
And also, I guess I should say this. The inspiration for this video was Vinny's doing spreads. And he texted me in the morning. He's like, I have a spread in AMC, and it looks like it's going to go up. And I said, it's definitely going to go down today because it was a perfect descending triangle. He's like, oh, and then it tanked, right? So we are utilizing both of our skills. He is very good at spreads. Well, a lot better than me.
Learning.
I'm very good at chart analysis. This is like all I do. So we're trying to utilize our different skills to be able to make money.
Exactly.
All right. So what do candles tell us, right? So at the left, you have the high, the close, the open, the low. So open, meaning it opened at that price, closed, went all the way up. And then the high is the wick that it actually hit in that time frame, and the low. The red candle is the exact opposite. I'm sorry, it's the same, but it just opened at the top and closed at the bottom, meaning in whatever time frame it was, it either opened here and then closed down here, or down, 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 whatever you want to do.
Okay.
This is the same for all time frames. 1 minute, 5 minute, 60-minute, days, yada, yada, yada. So if you're looking at a 1 minute chart, candle patterns don't really matter that much because it's a 1 minute chart, right?
Okay.
If you're looking at a daily chart, then obviously there's more conviction. There's more time behind the move, and we'll show you what that means.
Okay. When you're doing day trading, what candle are you looking at? 5 minute chart candles, or
1, 5, 15, 60 in day.
so you use all of them?
I have 5 charts on each screen.
Wow. Okay. Interesting.
So the daily, and this is the same for swing trading. This is the same for everything. You get the direction from the daily and the 60.
Okay.
You get supports from the 60. And then I'm just trying to get a good entry on a 1 minute. That's it. It's that simple.
Okay.
So the thing that you need to realize is think about the distance traveled between these two candles. Okay. And the reason Vinny's doing this is you don't ever read charts, right?
No, I usually use line charts, not really candle charts.
So don't ever use line charts, everybody. That's a bad idea. So on the right, you have a full red bar and a full green bar. Okay, so for the full red bar, it opened at the top and it came all the way down. Okay, so that happened at one point. On the left, we have it opened at the bottom. No, red. Do the red one. Red hammer. There we go. It opened at the bottom, went all the way up and all the way back down. So meaning it moved almost twice the length of the candles on the right. Does that make sense?
Twice the length of the candles on the right, as in like, because you're including this still looks like a pretty solid kind of bar though, as far as like the size here.
Exactly. So move your arrow to the top of the red candle on the right. So it moved all the way down and closed, right?
Okay. Yep.
Now go to the candle on the left. It opened, went all the way up and all the way back down.
So open, went all the way up, and then it came all the way back down and closed.
So it opened where your arrow is, a little bit above that.
Yeah, this one.
Yes. And then it went all the way up, all the way back down.
Okay. Understood.
So it moved twice the length as the one on the right.
Understood.
Okay. So it's easier to think of this as a battle between buyers and sellers. The battles on the right, both the green and the red candle, it was more of a slaughter, right? So they didn't put up much resistance.
Good.
However, what can happen after you have these candles is something called exhaustion. So we'll take the candle on the right, the big red candle.
Yep.
The sellers won. Obviously, it went down.
Yeah.
And it went down a lot. At some point, they're going to be exhausted and the buyers step in. The candle on the left, the red candle on the left.
Yeah.
What this shows is that buyers did step in and still lost, pointing to even more selling going to continue.
Okay.
Right? So one shows conviction of this move is not done. Buyers tried to step in and they failed. It's most likely going to continue downwards.
Okay.
The candles on the right are saying it went down hardcore. It might continue tomorrow. We're not sure. We didn't get to see what the buyers fought back with.
Okay.
Okay. And then the green candles are the exact opposite, right? It's just in the upward direction.
Understood.
All right. So this is the most confusing slide, I promise. So top left, that's called a doji. We don't learn anything, but we do because we didn't, if that makes sense. We see that it opened around the middle, went up and down, and then closed back around the middle.
Okay.
Right? So
indecisive, indecisive,
Exactly. It shows indecision. And when you have indecision at the top of, let's say, an uptrend, let's say the stock has been going up for days, and then boom, you have an indecision candle. That's showing you either A, we're going to consolidate for a period, B, we're going to go down, or we can consolidate and then go up. Either way, if you own shares, that's a solid place to sell.
Okay.
Because you most likely, if you think it's still going to go up, could just buy after the consolidation ends.
True.
The right, so that's called a spinning top and a hammer. That's really the only names that you need to know. You don't need to memorize the friggin' 50 from that list.
Okay.
It's so stupid. Like, can you imagine how many different stupid names you can come up with for the candle like this? There's so many.
I love it.
Not important.
I like the spinning top and the hammer. They make sense.
They make sense, and that's all that matters. Okay. So a long distance was traveled, as we show, and then you see persistence of the winning side. So let's say that you're in an uptrend, and then you get that spinning top.
I think it's over.
It's most likely over.
Yeah.
Right? I see that literally all the time, and I have 90 examples of that. If you see that, you're done. AMD just did it.
Yeah.
Right?
I know it did.
It happens every single time. Robinhood did it on a 60-minute candle, then it tanked. It happens every single day. Now, we already went over the bottom left. This wasn't a battle, but a slaughter. Now, let's say that you get that green candle, bottom left, and then you get that red candle the next day. No, bottom left.
Oh.
There you go. You get that green candle day one, and then you get that red candle day two. What's going on?
I mean, green candle obviously said like the buyers just had their way and there was no resistance to it. But all of a sudden now you have this massive red candle. I would say that the market is completely like just switched without an actual indecision point or something like that.
So what it means, and this is where everyone on YouTube just goes wrong, and then they just find some weird chart pattern to prove their point, and then they're wrong half the time because it's completely luck. Volume is what matters right there, and that's where we're going to next.
Okay.
The volume is honestly probably more important than the patterns, but no one ever pays attention to volume for some reason. Go back 1 second. The pseudo hammer, spinning top, bottom right, that's what you see more often. It just shows that the battle was a little bit more one-sided and not like way spinning top hammer status.
Okay.
All right. So volume is the other half of the puzzle here. If you look on the left, you see AMD's beautiful chart.
Yeah.
Okay. Now, you see how the volume on the bottom just shot up?
Yep.
Way above normal, right?
Exactly.
Now, I want you to move your arrow to actually June 17th.
June 17th. Where are we?
Where at the beginning?
Right.
You see that big average candle?
Uh,
That big bullish. Oh, sorry. I should say this. My candles are white for bullish.
this one?
Yeah. You see how it went up on volume?
Yeah.
It broke through support. It had more than double the volume as told by that gray line on the volume bar.
Yeah, I see it trending along the bottom here.
Exactly. So now we know we're in an uptrend. And then it burst through that white line of support.
Okay. Yeah, right up here.
Right. And what I want to show you is just go to the ending days. Right.
Okay.
Absolute insane volume.
Yeah.
Just ridiculous. So on the other half of the puzzle, it's the exact same thing, but coming down on hard volume. So that initial big volume bar on the right side.
Yep.
No. Right graph.
Oh, right graph. Gotcha.
So go all the way. This is Nicola, by the way. So yeah, first big one on that. Yep. There you go. Go straight up. Big red bar breaking through that support, followed by a spinning top. We know that this is just going to just
keep going down.
Exactly. Volume.
Hey, looks like there's a hammer, though.
There is a little hammer. Don't worry. We're going to get to that. Good job, Vinny.
Yeah, I picked up something.
So it's just to show you volume is extremely, extremely important. Okay. All right. Go to the next slide. So there's also something called self-fulfilling prophecy. Now, the supports that I use are the 200 SMA, 150 for swing trading.
Okay.
X is something that we recommended constantly for swing trading because look at it bounce off that same line every single friggin' time.
Bounce, a little bit of a bounce.
And then it failed.
It's like
right? But it worked 5 times. Okay. The reason why it bounced at those levels is because everyone's watching that level because it's respected it for so long. It doesn't even have to be warranted, but because all these brokers and hedge funds and day traders are watching that one level, they all put buy orders in at that level to sell at the highest one because they know that about 70% of the time it's going to work. So because that level's there, doesn't actually mean anything. It just ends up working.
Understood.
All right, next slide. So this is just to show that again, this is Home Depot. Do you see a very obvious level that it bounced off of with high volume and then went off?
Yeah, this right here it definitely looks like it. Yeah, is this the 100?
That is the 100.
Yeah.
To the penny, right? Just bounced off and just kept going up. Okay?
Yeah.
Obviously, the 50 SMA is not as strong as a support as the 100. The 100 is not as strong a support as the 200. Everyone who has watched my swing videos knows that my favorite swing strategy bounce is the 200 because it's the strongest one.
Understood.
All right, nexties. Right. So this is crap, right? Well, one of the problems with charts is that you look up like popular patterns and like this never happens. This is never going to happen ever. You can find perfect charts online to reinforce your point, But what we're going to do after this is I'm going to show you examples that are realistic examples. They're actually all examples that I traded in the last 2 weeks.
Okay.
Okay. You're never going to see anything perfect like this. This is crap.
Yeah. People like draw lines to make it fit their story a little bit.
100% they do. 100%.
I've seen a lot of descending triangle drawn on AMC graphs over the last like 3 weeks or so.
It's so stupid. All right.
Yeah.
So this is Nicola. Okay.
Mm-hmm.
So I put in this white line myself. This is not there. I put this in because to me, if you take this white line out, it's hitting this all the time. Boom. We have a hesitation here.
Mm-hmm.
Comes up. Big wick. Doji that we talked about, indecision, comes back down. Boom, boom, drop.
Okay.
Okay. So when you're looking at a descending triangle, I figured that I should like draw these in now just to make them better.
Mm-hmm.
Ooh, let me change the color. What's your favorite color, Vinny?
I'm a blue guy.
You're a blue guy?
Yeah. Yeah. Pretty blue.
It's pretty blue.
Yeah.
All right. So when you're looking at a descending triangle, which is something that I love to trade,
mm-hmm.
you want to make sure that you actually see it. Let me get one more. So based off of this graph, I found this support myself, and I think that it respects it quite a bit. When you're looking at a descending triangle, you want to have it come down, hit the support, more importantly, bounce. Now, if you look, this guy bounced with a hammer, right?
Did.
It had wicks going, showing, hey, this is going crazy. Also, I might just get rid of these EMAs, actually, just to make this less confusing. So it bounced with a hammer, comes up, and then we have a full red bar. And it actually closed below my line. Now, this is called conviction. It did not do this with average volume. And if you're going to break these levels, especially when you look in the past, it breaks them on way more than average volume. Mm-hmm. Like every single time. It broke it here, way more than average volume. It never closed below this line, so that doesn't really count as a break, in my opinion, because it means it went up there and then buyers bought it right back up. But every time it's broke it, it does it on significantly higher volume. Here's a high rejection. And then boom, big bar, right? Does that make sense?
Mm-hmm. Yeah.
So when you have your descending triangle, it actually closed below my line. I didn't take it because it didn't have the volume. It then came up, which is great from the next day, and it actually gapped so bad it opened below. It opened below my actual support, so I shorted the crap out of this because I knew that this was just going to tank. Mm-hmm. And it did. It ended up going $13 to $10. That's a 33% drop in 5 days. Right? Absolutely crazy.
Interesting.
Does that make sense?
It makes perfect sense. My question would be like, now that it's had this move and it looks like it's actually kind of bounced off that other support line you have drawn there.
Yep. So I do this one as well.
Put in a hammer. Like, now would this be something that you would open a short-term long position in?
No.
No?
No, because then it's at that point it's gambling, right? Because we don't know what's going to happen. This could just consolidate sideways and then continue lower.
Okay.
We just know that at this level, it doesn't necessarily mean it's going to bounce, especially when it has this amount of downward pressure. Like, this is 4 days of sustained high volume, not one.
Mm-hmm.
Okay. Also, to put this out there, this is the 200 SMA. You can see it rejected the crap out of this like 6 times.
Yeah.
But in a descending triangle, you want to go down, come back up, go down. I usually like to see it one more time, but that's just me.
All right. So it broke out to the bottom. Interesting.
Broke out to the bottom. So
see,
let's go to.
I thought the hammer meant that the buyers had then won the battle there.
Which one? Hold on. Let me go back. There.
Yeah, and the little hammer at that
right
the very last day.
Oh, right here?
Yeah.
It did. That's why I don't want to take it, because remember, we're now at average volume when you compare with the last 5 or 6 days.
Uh-huh.
If this was a hammer that like the volume's up here,
okay,
I'll take it.
Okay.
But right now, to me, and when you see other people on YouTube, they're gonna be like, "Hey, it's a hammer, take it." I don't know what's gonna happen. It's just gambling. Like, here's a hammer too. It just kept going, and then it went up after.
Okay.
Here's to me, I need more evidence, because the biggest part of swing trading and day trading is conserving your capital.
Understood.
So AMD, this is another line that I drew myself based off of how many hits it had.
Mm-hmm.
Now, obviously, this is a very obvious one. This is also kind of fundamental because they reported earnings. Now, their earnings did not warrant this move at all.
Yeah.
But they pierced on high volume and then just absolute took off, right?
Mm-hmm.
Before, they broke this level twice. They did so on barely higher than normal volume, and it failed. They did it again on literally average volume, and it failed. That's what I'm talking about when I say a pierce and fail, and how you need conviction. You need volume behind your moves anytime you break this level.
Mm-hmm.
That makes sense?
Yeah. Is that a spinning top there in the last day you see on AMD?
Yes. This does not bode well, right? This is bad.
Yeah.
We don't know it's most likely going to continue downwards.
Yeah, it's going to retest that like $100, $105 range.
Exactly. Now, to save time, I drew some descending triangles to make this easier. Here's Penn.
Okay.
This is, again, a white line that I drew. It's very important that you find these yourself. You can see stocks just boom every single time. Every single time it comes back down, it just hits this level over and over and over. So this is a good example of roofs and floors. So it's coming down. It did finally break it. Not really on the volume I would have liked to have seen. And you can tell that it just goes right back to that level. So this is not something that I would trade, because there wasn't any really high volume conviction move here other than this guy, but it was kind of above it. And also this was a weird day in the market.
Interesting.
So it's a descending triangle that I probably would not have taken. Swing trading, I would take it day trading just because it looks like it's going to break.
Okay.
Kind of makes sense?
Yeah, what do you think of that volume bar, though? Now, like the second to last day, there's like a decent-sized volume bar, but it was a slaughter, right? Because it was a big, tall candle.
It was a big, tall candle. The problem, you also have to look at the market as a whole. A lot of stocks kind of had that. You want it to be unique, but I would not take this short or long because of the rejection off of this moving average. Okay. And then on top of that, I don't like going into a bunch of moving averages, like, because they're going to bounce so many different times. Okay. I want to do like all-time high stocks or low tanking Nikola stocks.
Okay.
There's millions, not millions. There's thousands of stocks to choose from. So I'm going to choose the easiest ones that work for me. So this is another support. I'm sorry, this is not a support. That's why I made it pink. This is just a ascending triangle, okay. A non-perfect one like you're going to see more often in the stock market. So I made this mark here because the 200 SMA is this one. So I figured it would bounce. It then bounced, came back down, and this pink line is arbitrary. I'm just trying to make it look like a triangle, right? Yeah. It did dip below it, and then it came right back up. And more importantly, it broke on increased volume and then just kept going up. Okay. So you find the level, and if it breaks on volume, you can take it. You can even take it after this day because it was a hammer. That's what I did when I was day trading. CCL, right?
Yeah.
Oh, you know what? I'll also show you, and anyone who's still watching, what I often do when I'm looking at these, because it's so easy to just cheat and like make your point look like you know what's going to happen. So what I'll do is, when I think I see a descending triangle on a chart, I'll try my best not to cheat, and I'll hit the arrow thinking of what I think is going to happen next as it approaches levels, right? So like, what do I think is going to happen after this hammer or this bar? What do I think is going to happen after that? And now I know that I have a pierce on high conviction, on higher than average volume, and then, boom.
Yeah.
It's just a way to check yourself.
Interesting.
Let me go back to, I have one more.
So, now that looks like a hammer to me.
This?
Yeah.
It is.
Okay.
So this is me drawing a support. Again, it's very important that you be able to find these on your own, but it's just wherever you see rejections and bounces. So to me, this is very obvious.
Mhm.
It's just a kind of an example of roofs and floors. So when it breaks through said support, it's no longer support and now acts as resistance. So roof, floor, support, resistance, just kind of an example of that. Does that make sense?
Yeah, I've heard of that before, but yeah, it certainly looks like it makes sense. So
So
it has a new ceiling now. That was that $21
exactly.
price.
This was propping this stock up. Now, as it approaches this, that's going to be a new resistance, not to mention the 200 SMA.
Yeah, and it's a hammer, but it's on average volume, so it's not something that would be worth taking.
Exactly. And you don't want to take a stock after every single hammer, because if you look closely, there's like tons of hammer. Like there's a hammer right here followed by a negative day.
Yeah.
Because if it's a hammer on average volume, it means absolutely nothing.
Gotcha.
Hammers that are like on high crazy volume, those are the ones that you take. This is just another ascending, an imperfect ascending. So I drew this line. It's a line that I saw as support, or I'm sorry, resistance. And we kept on getting higher lows each time, boom, boom, until we burst out of it. This is not an awesome one. It did break on conviction, and then it chopped around for a bit. You still would have made 10% though, so that's more what matters.
Yeah, that's a pretty sloppy looking chart right there to me.
Exactly. When you start with this, you start with this line. Where is the stock hitting this the most? And now you have to look at. So this is actually in my swing trade videos. I swung this successfully. Let's just not cheat here. Oop, that was too far. So I recommended it here when it was approaching this level. Okay. I recommended it here, and then I held on to it for a little bit. There we go. So this is when you do that thing, see how you think you're going. I felt good because I had supports here, and then the bust on conviction. So either way, I made 10%, but you have to be able to draw this line yourself. This is the most important line.
Okay. That bust on conviction doesn't look like it's like a little higher than average volume.
Yeah, it wasn't great. That's why I like the example, because all those stupid examples are perfect.
Understood.
And not realistic. Here's a
old King SPY, man.
Yeah, I just want to show you like a high volume hammer. Like this is one, man, this is just ridiculous graph. Holy crap. This is 40 points on the SPY in like 7 days. Like this is a high volume hammer that I would take because it was just insanely high volume for the rest of everything happening.
Okay.
All right. That's all I got.
The hammer doesn't necessarily have to be green, correct? It can actually be red.
Yeah, it can be green or red.
Okay.
Hammer. This is a hammer. This is a hammer. It still means the same thing. It just changes the opening position. The color honestly doesn't matter. This just means that it opened here, still went all the way up, but buyer still bought it all the way back up. Same as here.
Understood. Interesting.
So we ended the week on what? On a little doji. We're chilling. We don't know what's going to happen.
Yeah, don't know what's going to happen. That makes perfect sense. All right, cool. That was useful. Thanks. I definitely I'm trying to learn a little bit more in this realm, so I'll reference back to this video and probably watch it a couple times.
Yeah, I went pretty fast, and I tried to find sloppy examples because that's realistic. All those stupid like YouTube channels, like just when it goes down, just buy it here, and then it just goes back up. That's not how that works.
Yeah, that's called hindsight. It's great.
Yeah, I know. And whenever you're looking at someone teaching you something, when they use hindsight, it's the worst. It really helps to move your chart and keep a log in your notebook and be like, today's the 8th. So you would have all the information up till now, and then you can actually predict what you think is going to happen.
Yeah.
And then if you're right, you can see if you're, doing it accurately.
Yeah. I mean, why not, if you had hindsight, just go back and buy Amazon at $6 a share in like 2001.
Exactly. It's a pointless thing. It just reinforces bad habits. More importantly, I have a list of 80 stocks ish I look at every morning at 5 in the morning. I know.
He's crazy.
Yeah, and probably 3 out of those 80 will have a good setup for me. So you can be picky as hell, right? There's so many stocks. Like I look at the volume in the morning and I'll be like, all right, I want to trade a stock that everyone's trading right now because there's something happening or it had just broken something. Okay. So I out of 5,000 stocks, there will be 20 on that list. So you don't have to trade the same stocks every day, or you can be picky as hell. What's that Warren Buffett thing?
It's not about the money you make; it's about the money you could lose. Like you got to look at the downside risk. Is that what you're thinking?
I think he said that when he's teaching class, he's like, if you only had 10 trades that you can make in a year, you're only allowed to have 10.
Yeah.
You can bet that you're going to do way more due diligence on those 10. So you don't get sloppy. You pick setups that you see that you're like, all right, I think that this is going to work. Also, probably don't play near earnings. Probably not a great idea.
I know that the implied volatility gets so juicy around earnings, though. It's very tempting sometimes.
So I don't know anything about put spreads. So we're going to link this to Vinny's put spread video because he keeps texting me on like, what's going to happen here? Then I'll tell him. And now he's beating me in the stim challenge.
Well, I don't know about that. I'm like basically flat right now, but
I was very negative. So he's essentially using my own information against me because I don't know how to utilize my information outside of day trading.
Yeah. I'm going to teach you another video how to use vertical spreads with like this kind of swing trading mentality to hopefully make a few bucks.
Yeah. I mean, even if you can make like $50 a day, that's great.
Yeah.
So.
All right, guys. Well, we'll catch you guys in the next one.
All right, later.